Hello everyone. Welcome back to my YouTube channel. Today I'm going to be breaking down Gbpjpy. The current date is Saturday, 15th April, 4:30 UK time. I'm looking to have a tremendous week this week, as we are for every single week. Um, Sorry I haven't been active for the last week and a half or so. I didn't have my weekly breakdown for just a few personal reasons, but we are back and we are ready to absolutely slaughter JPY. So let's see what the market is providing us potentially this week and over the next couple of weeks as well. So we can clearly see on the monthly time frame what is going on. We can see that we have been rejecting this area of 156. 156 is a key psychological level. Yeah, around just that area right there. We can see when price came into this area, we melted all the way down into 1.28. We rejected here and melted. We melted around here and then we broke, we retested and pumped all the way up there. We retested again, we retested again. We clearly cannot break 156, and that is a barrier for us that we are struggling to break. If the monthly closes below 156, potentially we can see price roll over all the way down into 140, but we're not there, so we're not worried about that. What we're worried about what's happening right now and what's happening in the currently where PA is. As we can see, if we zoom out a little bit, we can see that we are heading into a key area, a monthly area of support. And one thing I want you all to note down is that we like these prominent wicks. This is a prominent wick. This is a prominent wick. When price leaves such a huge wick, that means we pumped, sellers pumped all the way price back down here, and buyers just got involved exactly at that price point and caused this to reverse. We call these prominent wicks, and price likes to sometimes liquidity grab these wicks, respect these wicks as a support or a resistance. So we like these prominent wicks. Whenever you see a huge wick like this, or a huge wick where was it? Where's it gone? Oh, here. This huge wick here, that's prominent. And it usually combines with another area of support. So we can clearly see that when price, this is our next boundary on the monthly time frame, 168, potentially even 170. So if we go down onto the weekly time frame, what can we see? We can see we're clearly bullish. We're clearly on an upside. We have upside momentum, right? And we are also forming daily higher highs and higher lows here. If you go on the daily, you would see that exactly, but we'll come on to the daily time frame. What can we see that's going on? We can see when we align our monthly 168 area of resistance, we can see when price came into this area on the weekly time frame, we absolutely melt. So guess what? If price comes into this area, and I'm assuming we're going to get a wick into this area on the weekly time frame, what am I looking for? I'm looking for price to melt. If we break it, guess what? I'm looking for price to pump to the upside, because this is a very responsive, repelling area which we like to take advantage of. So, what are we seeing right now? We can clearly see that price is above our key half level. We like our whole levels, 170, 160, 150, but we also like our half levels, 165, 155, 145. Why? Because we know financial institutions like to bounce price off these areas. It is very easy. If you're a business, you're not going to be looking to take price to 16432. No, you're going to try to keep numbers as easy as possible and as round and as easy as possible to read. So 165 is an easy number to read. So guess what? We like to trade price off these areas because we know the institutions like to, and they're basically dictating the markets. By the way, I'm not an institutional trader, but I like to take this into consideration. I don't even know what institutional trading even means. What does that even mean? What, like you trade like the institutions? Or you still do your technical analysis just like us? So I don't even understand that. But anyways, going back to what we were saying, we can clearly see that on the weekly time frame, we saw rejection number 1 of 165, rejection number 2 of 165, and now we've broken 165. So this is another indication that we are looking for buyers. And also, if you zoom in, we can clearly see we have higher low, higher low, higher high, higher high, but we pinched above the previous high on the weekly. This gives us another indication to look for buyers. All right, so when I look at the weekly time frame, sometimes I like to predetermine and or predict or have just some sort of hypothesis on where the low wick will be and where the high wick will be. Potentially, I can see us forming a higher low wick into this area of 165, staying around this area for 1-2 days, and maybe on Thursday and Friday we can see a pump to the upside of to 168. GJ sometimes consolidates throughout the week and has the huge move on 168. Sometimes we may have a huge move on Monday and consolidate from Tuesday, Wednesday, Thursday, and have that huge move on Friday. So we are just prepared for every type of dynamic scenario the markets bring to us. We're just going to adapt, stay calm, stay focused, and when we see our opportunity, we are going to pounce aggressively like a tiger. Yes, like a tiger. So when we go into the daily time frame, what can we see? We can clearly see we are forming higher highs and higher lows on the daily time frame. What I love, another point, if you want to note something down, is we love three drives. We love drive number one, drive number two, drive number three. Usually after drive number three, we see price melt to the downside. What do I mean by this? If you see, right, if you go on the daily time frame, we were bearish for a short period of time from March. We were basically bearish. April, guess what? We're looking bullish, and I like that. We can see that we had drive number one, we dropped. Then we pulled back. Then we had drive number two. Then we had some sort of consolidation. Yeah, pullback, consolidation, whatever you like to call it. Then we had drive number three, and we reversed. So I'm looking for the same thing right now. We're just looking for clues from the market, combining with our price, our analysis, with our key levels, with our market structure. We're just trying to make sure that we are trading the highest probability trades. And whatever you want to risk, you can risk on those trades. Usually you want to risk 1 to 2% on your high probability trades and 0.5% or 1% max on your low probability trades or medium probability trades, I would say. We don't like to take low probability trades. It doesn't make no sense. It's low probability. So why are you taking it? It makes no sense. All right. So what can we see? I can see on the daily time frame, we had drive number one, a huge drive. Then we had some sort of pullback. Now we're having drive number three. Now I'm looking for a pullback. Maybe this is the pullback into 165.500, but we may be able to see that with more clarity in the 4-hour time frame. So we'll come back to that. So we can see some sort of pullback here, and then I'm looking for drive number four. Let's actually duplicate this and see if it's similar. Duplicate. Yeah, some sort of similarity because we can see a pullback into this area and then a pump back up. So that's what I'm looking for. Guess what? If we just destroy below 165, I'm not trading no buys. I'm not looking for no buys. If we just break through with huge momentum to the downside, that's a possibility. I need to keep that at the back of my mind because the market is full of surprises. All right, so we can see on the daily time frame we pinched above this week. We had rejection number one, rejection number two. This gives us indication that we are losing momentum to the upside for now, right? So we can see that maybe we're going to slow down, maybe we're going to consolidate for a little while before we have that upside move. So we see this prominent wick. I told you we like the prominent wicks, especially on the daily time frame and the weekly time frame. We can see this prominent wick. We are maintaining below it for 2 trading days now, and even 3 trading days because we formed a lower high below it. If we go into that 4-hour time frame, we can see we've rejected. We went above it for 8 hours and we came back below with huge momentum. Guess what? We are respecting this wick. Maybe this is giving us clues that we are looking for a bigger pullback, but this bigger pullback is not guaranteed. Why? Because we can clearly see this area of 4-hour support. 165.500 coordinates. Clearly very obvious. For you people who call yourself institutional traders, yeah, you can maybe see us tapping into this 4-hour IT candle, but I don't really trade like that. I have that in the back of my mind, but it's not something I add as a compliment, to be honest. We can clearly see that we have rejected this area once and had a huge engulfing. We rejected this area once, huge engulfing, rejected again. But as you can see, these moves to the upside are getting smaller and smaller. So this area potentially is becoming less and less responsive. So maybe we can see price potentially next time we revisit this area, we may break below, we may retest it and pump down into 165. Now, the question is, what is that going to happen? Guess what? We don't know. We don't know. So we need to wait for price to come into this area. If I see a clean 4-hour rejection, I'm going to scale down into the 30-minute time frame and start looking for buys into 168. But if I get stopped out, which is possible, it's fine. I risk 1%. I will wait for price to come into this area and I'll look to enter again. And guess what? My risk to reward will be even greater for my TPs into 168. Okay, so that's that. Let's keep that there. Let's go to the 4-hour time frame. Let's go to the hourly. Let's see what we can see. We can clearly see that when price came into this area, we pumped to the upside, right? And if you take a zone like this and you bring it across, we can see when price came into this area, we pumped to the downside. So we had a similar sort of move. And we can clearly see we are rejecting below this area on the 4-hour time frame as well. We can clearly see on the daily, we had a rejection. We had a 4-hour rejection once, twice, 3 times. And guess what? Look what we have there again. We have our prominent wick on the 4-hour time frame. Guess another note for everyone that want some clues. When price makes this first high, it is very important because price likes to respect the first high which was made. What do I mean by that? Sometimes what price can do is respect this first lower high that was made and consolidate and manipulate all these intraday highs and just maintain below that first high was made. And if it continues to maintain below that high and is continuously rejecting this zone, we can start looking for sells to the downside. So I'm going to see how price acts. If I see some clean rejections here, and price continues to maintain below this area, I may take an intraday sell down into this area right here. It's a medium probability trade if that occurs. Why? Because we are overall bullish, but I do see a leg to the downside. So maybe you can have TP1. If you want to take a more risky approach, you can have a TP2. But you have to remember, if price comes into this area, maybe you want to take partial profits and move your stop loss to break even so you have good trade management. So what we're going to do is we're going to wait and see what happens. I hope this was a very educational video for everyone. I hope you all have an amazing trading week. Please stay calm, stay patient. Don't beat yourself up too much. We all make mistakes. We all struggle with the market sometimes. Your job is to not get clouded by the erratic moves that the market brings, the losses that you make. You just need to stay calm, learn from it, come back the next week with a cool, calm, collective brain, and flow in and out of these markets with ease. That's all we're doing. We're flowing in and out of these markets with ease. That's all we're doing. We're saying, all right, if we reject this area, we can flow in. And maybe if we reject this area, we flow out. But if we break below, we stay in this market. We can maybe get that retest and come back to the downside to 165. And that's when we flow out of the market. This is a key level. If we get a rejection, I'm flowing back into this market and I'm looking for upside moves to the upside. That's how simple trading can be, and you can get into that flow state with a lot of experience, with a lot of hardships, with a lot of failures, with a lot of lessons you have to take, with a lot of blown accounts, with a lot of losses. But that will all build your character and build your trading system and make you a better person overall. So please stay patient and good luck to you all for the rest of this trading week. Let's go.